before you decide what you want to do your research in terms of find the proper real estate agent first. So that would avoid any delays in finding an agent, right? Because you need to do some research in terms of who's going to be your best agent. So once that is done, all right, I know who's the agent going to be, then you can start looking and selling your property simultaneously. And then when you start getting an idea of how the property is looking, if you've got good inspections coming in, what your agent is telling you, how the property is going to sell soon, or is it we need to change the price. So just whatever you can shave off the timing, then do that.
Yeah, I think where they rush into the purchase first without doing the research on the sale, and all of a sudden they start having to rush through the sale part. So hi everyone, and welcome back to another episode of The Broker's Lounge. I'm joined by my usual colleague, Eddie. Welcome, mate.
Thank you.
Yeah, well.
The usual, unusual colleague. The usual is unusual.
Okay, the usual. Back to The Broker's Lounge with my unusual colleague, Eddie. Oh, no, I use it.
Thank you.
In a nice way.
Because what does usual means?
Does the usuals. Yeah, I don't know.
Right?
What? Yeah.
Anyway, I'm good, mate. How you doing?
Glad you answered my question. Doing very well.
Good to hear.
Have a good week so far?
Yeah, very good. Yes, yes, fine.
Today we are going to be talking about upgrading. So for those looking to upgrade their property, so I know we've talked about in the past with first-time buyers and stuff like that, but this one's going to be about who are wanting to upgrade their homes. So whether it be their first upgrade, second, third, fourth, depending on how it might be. So, but just some things that we need people to be, we want people to be aware of. A couple of pitfalls that people typically fall into. But yeah, and essentially we're going to be talking about things like bridging loans, because that's one of the things that I think a lot of people have heard about, probably don't understand 100% how they work. And for those of us who've been around for a long time, so bridging loans in the past was seen as the big evil type loan, where it was going to cost you an absolute fortune to get one. And it was more so if you were in trouble, you had to get a bridging loan of some sort. So, but that's well and truly changed. So maybe we kick off, Eddie, by if you just give the audience a bit of a rundown as to what bridging loans look like nowadays.
Yeah, absolutely. And we've seen an uptick in a lot of bridging loans. So basically, bridging loan is when you use your existing property's equity, so the equity you have in your existing property, to cover the cost to purchase another property before selling the existing one. And the bank will give you a bridging loan to cover that purchase, so you can move into the new property, and then you've got 6 to 12 months to sell the existing property in which the bridging loan will be paid off. And you'll be left with a residual loan or no debt at all. So depending on what stage in life you're at. So if you're downsizing your retirement, you're going to buy a property to move into, but you don't have the cash, you can use your existing property to get a bridging loan going. You buy that new property, move into it, and then you sell your existing property, right? So a few things to be mindful about when it comes to bridging. The equity you've got in your existing property cannot exceed 80% when you're buying another property. So if you haven't got enough equity in your existing property, you might not be able to go down the bridging loan path. In terms of cost, so the only costly thing about a bridging loan is the interest rate that you pay on the loan that you use. And that's usually about 2.5% to 3% more expensive than normal rates. So it's not huge, but it's more expensive. And also that interest gets charged per month. So if you go to full 12 months without selling your property and paying off the bridging, it can be costly. But if you just use the bridging loan for 2-3 months until you have sold and settled your property, then it's not too bad. And also it's good to be mindful that this interest can be capitalized, so you don't need to pay as you go. And once the property is sold, this cost will be taken out of the proceeds. So,
yeah, probably worthwhile to note there are some lenders who do require you to pay the interest, but not the other lenders like except allow you to capitalise the interest on the loan itself. So which is it's important to be across what's available to you when it comes to bridging finance. So obviously reach out to professionals from that point of view. So
yeah, absolutely. So they're very useful. Like if you have no cash, you don't have the equity to, because when you go purchase a property, and I'm trying to just explain the process as much as possible for it to make sense and people can relate to it. So if you're going to buy a property, you need 5 to 10% deposit to put in, right? So if you don't have that, then you need some sort of funding done. And also if you're moving into that property before you sell your existing property, if you can't service both debts at the same time, okay, so if you've got a loan on this property and then you're getting a loan on the other property, sometimes you can't service both debts. So the benefit of having a bridging loan is servicing is only done for the end loan, not the total debt that you've got. The only thing you need to show for the total debt you've got is some savings to cover the repayments needed. So that is very helpful because a lot of people cannot afford two loans at the same time. So that's why it's actually popular, because it's got a lot of benefits. So it's not just focusing on the expensive side of it. If you can avoid it, then by all means, try to avoid it. Not because it's hard, it's just if you can just get normal lending, then yeah, go for that. But then, yeah, sometimes you can't escape it and you just gotta go down this path.
Yeah, exactly right.
So yeah, do you have anything to add? Did I miss anything?
No.
Yeah.
Explains it quite well. It is a topic that you could probably delve into even more, but it's probably more tailored conversation than we would have our clients, because every client situation is going to be very different. So it's important to know as well that not every bank out there offers bridging finance.
Yes,
so
that's important.
Obviously, reach out to your broker first and foremost to understand whether, if you've got a loan on your current property, whether that particular lender actually offers bridging finance. Because if they don't, and you need to go down that bridging finance pathway, it might require you to actually refinance your loan first, get it across to the right lender that actually does offer.
Exactly. Yes. So bridging is one option if you're upgrading.
Yep.
Probably, Carlo, you want to touch on other options such as using your equity or selling your property first.
I think it's good to understand, there are plenty of options available. It's not like bridging finance is your only option available. So yeah, like Eddie mentioned, first one is using the equity currently available in your property. And we see this a lot with clients at the moment where they build up great equity in their property. We help them release some of that equity to help pay at least the 20% deposit to go towards another property itself. It allows them to be able to seize upon an opportunity that may come up fairly quickly. So rather than sit back and going, well, I've got to wait until I sell my property, this way of being able to release equity quickly. And we can do it whereby we place it as an interest-only loan and have the funds sitting in an offset account. So they're not actually paying your repayments back until they actually require those funds as well. So good way to utilize the equity to your benefit. And like I said, seize upon, if the right property comes up quickly, you can act on it very quickly as well. So obviously there are some cons that go with the pros as well. And one of them is it can create a little bit of extra stress. I don't know if it creates extra stress as such, but for some people it may. But it's more so if there's some risk if the market drops. So you're buying a property or and then you're waiting to sell your property after that, then there's potential that the market may drop, which means you're going to get a lower price. But at the end of the day, if you're buying and selling in the same market, you're typically doing okay. It's only
like if the market drops, then you're going to purchase on a lower price, right?
Well, no, it's like if they purchase at the beginning, they purchase the property when the market's at a certain level, and then all of a sudden they're going to look at selling their property after that, and the market dips after that, then.
But they're going to purchase again.
But they've already purchased, saying.
Okay.
Yeah.
But there's always risk involved.
100%. Yeah. As Flo said, typically when you're buying, when you're upgrading, you can be still selling buying and selling in the same market. It's very rare that we're seeing the market turn that quickly, but it's just obviously something to keep in mind.
Yeah.
Could happen. So if you're selling first, you know, the pros of that is, it does simplify your cash flows as such, because it reduces any real overlapping of settlements. You know what funds you've got available for you for the purchase itself. And if you can time it right, then you don't have to worry about getting bridging finance or that additional cost as well. Obviously, the cons of selling your property first is that you could end up missing out on the property that you want. So if you're going to wait to actually sell your property, it might mean that by the time you sell it, you might miss out on opportunities as such.
Yes, and probably worth mentioning, if you're selling first, then you're going to be homeless until you find a new property, which you either have to rent or move with parents or in-laws or...
So you may save on bridging finance costs, but you may end up using that up through rent.
And it's like with your mother-in-law.
Or even just having to move for the furniture and all that.
Yeah, exactly. So it's a hassle. Yeah, absolutely. Best case scenario, if you manage to settle both simultaneous, like the sale and the purchase, but that's sometimes really hard to align both settlements on the same day, and either simultaneous or the settlement of the sale like a couple of hours before. So
you really need everything to sort all your ducks to line up really well, which is difficult to achieve, but not impossible. We've seen it from time to time with our clients. So, and when it works really well, because it's nice and simple for the client. They move once, there's no overlap, there's no extra cost, whatever it might be. So yeah, works good from that point of view.
Absolutely.
You want to touch on, I guess, more so from a cash flow point of view, if you're holding two properties?
With bridging or without bridging, or just holding? Because
probably with bridging.
Yeah, if you're obviously holding two properties, then you're accruing and paying interest every month on that loan amount. And obviously, if there's two debts, you've gone from, I don't know, 800,000 to 1.6 million, and all of a sudden your repayments are doubled pretty much. So you just need to factor that in. Also, you've got expenses that relate to the property, and then multiply that by 2. So whether you're paying your rates, your insurance, all that sort of stuff, you have to take that into consideration. If one of the properties is vacant, like you're not renting or getting any rent, obviously then you're going to have to be covering the full cost towards everything relating to that property. So all these need to come into consideration, and that's why the bank wants to see some sort of savings when they're giving you the bridging loan, to allow for all these expenses and allow for any shortfall, because maybe your income is not enough to cover the full bridging, and that's why the bank does not assess the full bridging for approval, but they want to see you've got savings to cover any shortfall. So yeah, just be mindful that you're going to have a bit more expenses, plus running a campaign. Obviously, if you're selling your property, that might have some cost which would come out of the sale, but you just need to factor all these in.
It really does require a lot of planning, and doesn't it?
Yeah. It's, I guess, just understanding like what you're getting yourself into, and just factoring, okay, my repayments for the interest part going to be $3,000 over 12 months. I need, what's that, 36,000, add another 10,000 just as a buffer there. I need to have that $50,000 sitting in my account to be able to do this without any headaches. And then once I've sold and paid down the bridging finance, I can be left with some buffer to get my money back.
We've seen quite a few bridging loans in the past, and I think the ones that obviously where it works really well is where there's no end debt as well, loss of equity in the property itself. So you're not, even if you're running two loans at the one time, typically, or if you've got a very low loan on your current home loan itself, the repayments aren't massive by any means. Which means if you're carrying both of them, probably not too much of an impact for the clients themselves. So but yeah, like you said, if you've got a fairly sizable loan and then you're upgrading, you're typically going to be spending a hell of a lot more as well, which means you're your next loan is going to be probably double that as well. So, it can be big impact to the cash flow. So you really need to be prepared and really fully understand what your total commitments are going to look like. Even if you're capitalizing interest on your loan, you've still got to be making sure that, you're going to be okay when it comes to the end as well.
Yes.
Because your selling period is the unknown part of it. Who would say, we'll have it sold and settled within 6 months. Unfortunately, that's probably not always the case. And before we know it, we're getting close to 12 months and they may not have even sold you, whatever it might be. So
Yeah, absolutely.
be really careful on it.
I think it's worth mentioning if you're like downsizing, you've got your property paid off, but you're still working, right? You've got the income. Usually what we do in those instances is just release the equity out, right? Like take the equity. You don't need to get bridging finance done. You just take the equity out, put it as interest only in your offset account. You don't do any repayments until you have found the property. And then that will give you time to just find the property you want. You move into that property, you just pay cash for it, and then you sell your property. The only time we use bridging is if there's no income and there's no end debt. So you're pretty much semi-retired. You're doing basic work just to, for fun, basically. And there isn't much income to get the loan that you need. But considering there's no end debt, then the bank does not care about your income. They care about the security. So that's when we get bridging done in that instance. Yeah. So I think it's good to know, right?
Yeah, well, true. Yeah.
Yeah. And also probably worth mentioning how the bank actually stress tests the income in terms when there's an end debt. So
excuse me. As we know, the banks will always stress.
Sorry, the debt, the debt, not the income. They stress test the debt. Yes. I said the income. Yes.
Okay. Well, you do pick that up. The same rule. As I said, as we know, the banks will always stress test loan repayments. There's always a buffer that they build into it as well. So typically there's that 3% on top of a normal interest rate to make sure that any potential rate rises, you're going to be okay. Other stress tests, there's a tongue twister in that.
Any stress tests 10 times?
No. Will include, obviously, like Eddie said before as well, if there's two loans running, the ability to be able to meet those repayments, whether they're principal and interest repayments on both, or interest on one of them, principal and interest on the other one, all that needs to be taken into consideration. So hence why that requirement to have decent savings as well is important. Because in the event that you can say, well, there's funds set aside to allow for those repayments as well. The other thing you mentioned before, rental, when there's rental assumptions built into it, that's well and good if it works out. But if it doesn't work out and the property is actually vacant, that income's not there. So the rental assumptions are going to be realistic, number one. Probably tested in terms from a valuation point of view as well, where someone's actually validating what the rental income, a letter from the real estate agent as well to say, we believe we can get this rented out. But it's always good to have that little bit of a buffer involved, because there will be times where you may not be able to get the property rented out whilst you're trying to, whatever you might trying to do.
Usually, sorry to interrupt, but usually with the rental, that happens if you're selling an investment property, which is rented out already, because if you're selling your owner-occupied property, most probably you're not going to rent it out, right?
Yeah, so it would only be a short term, if that. So.
And you can't usually rent it for a short term. So usually if you're selling like an investment property and then it's vacant for the time because you're putting the property on the market, and then it takes 6 months to sell. So you might be out of tenants for a short period.
Yeah, could be up. Obviously just having a clear picture of your income and expenses and potential rental returns is all very important. And once again, it always comes down to planning.
That's it.
Getting the right total.
If you've got a good plan in place, then it can be a lot less stressful, and you know what you're getting yourself into, right?
Yeah, 100%. So what would be some of the common traps that people fall into when it comes to home?
It's more miscalculations, right? And if you always plan for the worst, then whatever happens is better in a way, right? So probably we've mentioned them, but just to summarize them, it's overestimating how quickly you're going to sell your property. So some people think, oh, I'm going to sell my property in a month, after I settle, and then it takes them 5 months or 6 months. So needing to allow some buffer in there for the worst case scenario is very important.
Yeah, and always take the real estate agents.
Yeah,
exactly. Yeah, we'll be able to sell your property
just sign here.
Yeah, since they pay us that $10,000 worth of market cost down, we'll be right. Yeah, you're right. Because we've seen it on time where clients are expecting to sell within a couple of months.
Oh, I just had one recently. Like the client needs to sell the investment. It's not bridging, but they need to sell their investment property to be able to purchase something else. And the agent just went overseas over the Christmas period.
MIO.
Literally 6 weeks, and they didn't reply. The client was left in the dark, and he's going to miss the new purchase because they're not going to be able to sell it in time. So it's really important to, like, he's got a finance clause to get out of the contract he's in, but if he's not, then he might be in trouble, right? So that's very important to factor in. The cost of the new property. So you might think I'm going to be purchasing for 1 million, and then you go and purchase for more. That would leave you in a shortfall if you haven't got enough equity to use for your bridging finance. So it's very important to know what your limits are, miscalculating what your overlap repayments are, and that is during carrying both properties at the same time with 2 debts, which can take your budget out of control or affect your everyday living. So that's something you need to be mindful about. Treating the bridging as, okay, I don't need to worry about it because I'm not paying interest. That's if you're going with a lender that capitalizes interest, but just be mindful that's going to be taken out of your sale price. So if you don't manage to sell for the minimum price you thought you would, then that's pretty much eating out of whatever's left. So just, if you're going down the bridging, always aim to have the property sold as soon as possible and pay off that debt as soon as possible. And that's it pretty much, really.
It's probably one of those things where I think most people overestimate their selling price. And, we're working at the numbers based on what the end debt's going to look like if there is an end debt. But then all of a sudden they're going through that selling period and they can't get what they thought they were going to get. And all of a sudden their sale price gets lower and lower and lower.
And that's the thing.
The end debt gets higher and higher and higher. And then all of a sudden they're getting caught out because maybe they can't afford what the end debt's going to be. We don't get a huge amount of time, but it happens. So.
And the bank, you actually sign an agreement that you will sell your property within 6 to 12 months, depending on the lender. So like you said, if the property is not getting sold, now obviously the bank lends you based on their own valuations, not what you're selling for. But if you're not selling for whatever the valuation is because the market has changed and just the months are going by, and then you're going to get to a point where you have to reduce your price because you have to sell and pay off the bridging finance. And you might, cop a bit of loss on the sale. So, but that's all part of the risk that you take. I guess it's good to talk about like timing and the structure so you can reduce pressure, like we discussed before.
I think we probably covered a lot of that anyway, but it's more around the realistic timeframes around a sale and the settlement, stuff like that. Understanding that there is a time frame that you need to allow for. Not only it's got to go on the market first, it's typically market. Well, you've been through the process recently, so your advertising campaign typically goes for minimum 30 days.
Oh, minimum
longer.
Yeah.
Firstly they come out, they've got to take photos, get it advertised.
Exactly.
You've got a 4-week period of open inspections, whatever it might be, and then you typically got on average 60 or 90-day settlement period. So all of a sudden you've got say you're taking out bridging finance, and you've got 12 months to basically not only sell your property but settle on your property.
Exactly.
It's one thing people get caught up. They think I just got to sell it within 12. You've actually got to settle on it. You've already chewed up 4 months almost.
100%.
By the time you actually solve and settle on a property, if you sell up straight away.
And that's exactly. That's
so 4 months can drag out to 6 to 9 very quickly. So just getting those realistic timelines in place is important,
Yes.
and understanding all that. But once again, you get the right planning in place, you get the right type of advice, get realistic advice as well, especially from real estate agents. And if you do your numbers on probably worst case scenario, it just makes for a much smoother transition when it comes to if you have to take out bridging finance.
Yeah.
During that path.
My recommendation would be, before you decide what you want to do your research in terms of find the proper real estate agent first. So that would avoid any delays in finding an agent, right? Because you need to do some research in terms of who's going to be your best agent. So once that is done, all right, I know who's the agent going to be, then you can start looking and selling your property simultaneously. And then you start getting an idea of how the property is looking, if you've got good inspections coming in, what your agent is telling you, how the property is going to sell soon, or is it we need to change the price. So yeah, just whatever you can shave off the timing, then do that.
Yeah, I think where people get caught is where they rush into the purchase first without doing the research on the sale, and all of a sudden they start having to rush through the sale part, so it creates issues. So
It all comes back to planning, like we said.
planning one.
That's it.
Good. All right.
That's it. Anything else?
No,
No?
I'll let you close out.
Yeah?
Yeah.
I've got the privilege of closing. All right, cool. So thanks for listening or watching. We discussed if you're looking at upgrading your property, what some of the things that you need to be aware about. If you're going down the bridging or the equity or cross-securing, whatever it might be, there's options always. So we're always available to answer any questions and help you with any of your financial needs. We do this all the time, so it's not as stressful for us. I understand there's an emotional, you love bridging loans. I always understand there's the emotional factor and just the doing it, but it can be done. We just put the best plan out there to make sure it's as stressful as possible and you're fully informed about what are the steps that you need to take and what to expect. So hopefully you managed to take a few tips out of today's one. Until next time, thank you for listening. Leave us a review if it's a good one, and leave us 5-star review, please. Thank you. And until next time, thank you very much. See you. Bye.
Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.